The next set of riders we'll look at are the waiver of premium rider and the rehabilitation rider. Now, the reason we'll look at these together is because we find that many insurers will automatically include these in their disability policies. So the waiver of premium rider, what happens here, you become disabled, suffer your disability, and the insurance company says, okay, we get it, you're disabled. Now, you're going to have a period here. Usually with waiver of premium, it's going to be 90 days. And during that 90 days, you are going to have to pay your own premiums. So during this point, the policy owner pays those premiums. At the 90-day mark, though, what's going to happen is if you have this waiver of premium, now the insurance company will pay your premiums for you automatically. So now, instead of you paying the premiums, the insurer pays those premiums for you. And in most cases, they will also go back to your premiums that you paid during that elimination period for the waiver of premium, and they will actually repay those for you. So you'll have those retroactively paid back. This can be fairly attractive, and the insurance company likes this because it reduces the chance of the disability policy lapsing. The insurance company wants you to come back off claim and go back to paying premiums. That's how they make their money. The next benefit we'll look at is rehabilitation benefits. This is fairly straightforward with rehabilitation benefits, which we generally do see included automatically in disability policies today. The insurance company will help to retrain or rehabilitate you to get you back to work and get you off claim. The last of the riders that we'll look at will be the return of premium rider. So here's what happens with return of premium. We have our policy owner, let's say age 28, this person acquires their disability policy. And let's say they go from 28 to 65 paying premiums that whole time. And they never have a serious disability. Maybe they have a little disability somewhere along the way, but nothing serious, nothing that requires the insurance company to pay them out a whole ton of money. So they never have a serious disability during this whole time, and yet they've been paying premiums here for 37 years. Now you get to age 65, what do you have to show for 37 years of having paid premiums? Well, peace of mind, right? But you can't spend peace of mind. So what you could do is at the point where you acquire the policy back here at age 28, you could add a return of premium rider. And now, having that return of premium rider means that at age 65, you're going to get some portion, maybe 50%, maybe 100%, whatever your policy happens to dictate, you're going to get those premiums back. So those now are returned to the policy owner. Well, how does the insurance company make any money off that? Well, here you were at age 28, let's say paying premiums of, $800 a year. And now, at 65, the insurance company is going to give you back $800 for age 28 and the same amount for age 29 and 30 and so on. What was the insurance company doing with that $800 for that 37 years? Of course, they took that money and invested it. And they're going to happily take the returns off the $800. You get your $800 back, assuming there was a 100% return on the premium of the policy, which we don't always see. Sometimes it might be just a 50% return of premium, for example. So we've looked now at the 6 steps to building disability insurance, and I would encourage you to learn disability insurance in that manner. A lot of folks in the industry stay away from disability insurance because they find it too confusing, too complicated, and it is, in fairness, a complex product. There's a lot to know about disability insurance, and it takes us in some areas that maybe we're not comfortable with if we're really familiar with life insurance or retirement, for example. So I would encourage you, though, to learn it in that 6-step process, and the first time you go out in the world and you're sitting down with a client and selling them disability insurance, follow that process. It will help you to build a logical policy that will help to meet the needs of the client. It'll also serve you well on the exam. And I wish you good luck then going forward. Thanks for joining me again in this presentation of the LLQP video series.